Hello, everybody. Welcome to Monday Morning Must Knows. My name is Merlin Rothfeld, and the excitement is about to begin. Not that we didn't have any good action last week. We had Jerome Powell making some very hawkish comments about the economy, and of course, that sent the probability of a 50 basis point rate hike soaring. We saw 79% chance of a 50 basis point increase. That has subsequently dropped because of the unemployment data that came out on Friday. We saw that unemployment number jump from 3.4% to 3.6%, and all of a sudden, people going, "Ooh, maybe Powell won't be as aggressive." Now, this week, we don't know which way things are going to go, but I can tell you there are 4 or 5 really important macroeconomic pieces that are going to impact this market. And really for the next 2 weeks, expect a lot of volatility. Let's start things off with the quiet stuff. We'll start things off with the earnings calendar. As you guys know, earnings are near the tail end, so not a lot of exciting stuff going on, but I do have a couple names that you might recognize. 593 companies reporting this week. On Monday, we start things off with Groupon. Are they even still around? I guess you should, use Groupon to save a couple of bucks here and there, but come on, still around. Tuesday brings you Smart Sheets. Wednesday, you've got Adobe, Five Below, Lennar, and Franco-Nevada, the gold and metals royalty company. On Thursday, you've got FedEx, Dollar General, GameStop, and Jabil. And on Friday, you have nothing. All right, now it's going to just jump us right into the inflation numbers, I figured. Let's just boom right on through it because we know inflation is such a big deal. On Tuesday at 8 a.m. Eastern Standard Time, we have the CPI number coming out. That's the Consumer Price Index. And of course, that's the biggie that really everybody's watching because that's the measure of inflation. Now, we did see a decline for a short period of time, and all of a sudden, the most recent reading jumped up to 0.5, which had a lot of people going, uh-oh, maybe the Fed is going to be more aggressive, and the chess game continues on. The expectations for Tuesday's announcements are right here on the hard red edge. I'll put a little red bar. They're expecting it to be 0.4%, so a slight decline in consumer price index. Again, anything over that could create a lot of volatility, and let's be honest, really whatever that number is on Tuesday is going to create a lot of volatility, and that's going to be 1 hour before the equity markets open. Oh, but wait, we go from Tuesday into Wednesday with another gut shot. That's the Producer Price Index, which is going to happen at 8:30 a.m. Eastern Standard Time. And just like the one above, I'm going to draw a red line right where the expectation is. And can you guess where it's going to be? Yeah, significantly lower. So they're thinking that CPI might drop just a little bit, but Producer Price Index dropping significantly to 0.3% is the expectation. That might be a tough bar to get that low on our Wednesday session. Now, there's even more big stuff happening this week. Of course, we talk about central banks, and the real major one happening is going to be on March 22nd, which is not this week, but next week. That's the big daddy. However, we also had Australia, we had Japan, we had Canada last week. Now we're going to see this week another major central bank reporting. Drum roll, please. Can you tell me who it's going to be? I think you can. We'll talk about the European Central Bank giving out their announcement with regards to rates. The expectations right now are they're going to go from 3% to 3.5%. That's going to be Thursday at 9:15 a.m. Eastern Standard Time, so 15 minutes before the equity markets open here in the U.S., which may cause some volatility, some action out there. Now, the big issue here is their rate increases have not been as aggressive and steady as the United States. I believe the U.S. has raised at 8 consecutive meetings, and I believe that the European Union has raised at 5. Now, they're both raising very aggressively, but right now the U.S. is sitting at 4.75%, and the ECB is sitting here at 3.5%. So it seems like they have a bit of catch-up to play here to keep their inflation numbers under control and also kind of get up to par with what the U.S. is doing. Now, is this a keep up with the Joneses type of situation? I don't know. What I can tell you is there's been a lot of volatility in the euro. We've seen some pretty significant slides over the past month or two in the Euro USD chart, and that may be impacted significantly by this announcement that's going to be happening on Thursday at 9:15 a.m. Eastern Standard Time. Now, there's also, I believe on Wednesday, you have a retail sales number. You also have the Empire State Manufacturing Index. You have some central bankers speaking. So it's one of those rub your hands together because there's going to be a lot of opportunity, just not really sure which way it's going to go. So be more on the defensive side this week, probably the safest way to go. That, my friends, is your Monday Morning Must Knows. We'll see you next week.